where we take the fire hose of information around these really complex market moves and, well, we try to distill it down to the insights you actually need.
Yeah, the essential stuff.
Exactly. And today we are tearing into one of the most explosive stories in the AI infrastructure world. It's the huge, undeniable shift happening at Applied Digital, or APLD.
And we have some incredible source material to work with. We've gone through a really comprehensive analysis report, and it details their Q2 earnings, a game-changing hyperscaler contract, and, a capacity plan that just fundamentally changes how you have to look at this company.
Right. So our mission today is to unpack what these, frankly, soaring numbers really mean, and maybe more importantly, understand the structural change APLD is going through, how they're shifting from being a speculative builder selling potential to a proven operator that's generating serious, validated cash flow right now.
It's the validation story, 100%. And it's hitting the market with force. The core insight here is that their infrastructure isn't just a plan anymore. It's built, it's leased, and it's paying.
Okay, let's unpack this. Let's start with the financial performance that really kicked off all this excitement. Because this isn't just marginal improvement we're talking about.
No, not at all. This is about them redefining their entire financial trajectory in a single quarter.
So what were the numbers?
Well, if you look at the Q2 expectations, Wall Street analysts had forecast revenue around, what, $86 million?
$86 million. Okay, that was the baseline.
And Applied Digital didn't just meet that. They crushed it. The actual revenue figure came in at an enormous $126.6 million.
126.6, wow. Compared to what, last year?
Just $36.2 million in the same quarter last year.
So that's a 250% year-over-year increase. That percentage is, it's staggering, but the context here is even more important. Right?
Exactly.
This sudden jump isn't just, typical sales growth. It feels like it reflects a critical shift from them spending money to build the capital expenditure to actually earning money.
That's it. The construction phase is winding down and the cash register is definitely ringing. And the analysis report gives us the exact mechanism for that sudden cash influx.
So where did it come from?
The majority of that revenue, we're talking about $85 million, was from something called turnkey fit-out services.
Turnkey fit-out services. Okay, let's pause there for a moment. For listeners who may not be dealing with massive data center contracts every day, what does that actually mean? And why is that $85 million payment so critical?
It's a crucial detail. Think of it like this. Applied Digital builds the shell. The structure, the power, the cooling backbone.
Basics.
Right. And the anchor tenant, which is CoreWeave in this case, run these incredibly high-density AI clusters. They pay APLD to customize the interior exactly to their GPU specifications.
Ah, okay. So specialized racks, internal cooling, the specific electrical setups that CoreWeave needs for their high-power demands.
Precisely. So CoreWeave essentially paid APLD upfront to move into a ready-made, customized facility tailored for intense AI processing.
And that $85 million wasn't a promise of future revenue.
No, it was earned. Earned by delivering and fitting out the capacity in the first building at the Polaris Forge 1 campus.
So it confirms the physical infrastructure they were building is now operational, it's validated by a key client, and it's generating immediate major cash.
They proved they could build it, deliver it to spec, and get paid for it quickly.
And I have to assume this successful delivery at Forge 1 is kind of the prerequisite for the really massive news we're about to get into. But I have to ask.
Go ahead.
Doesn't relying so heavily on one client, CoreWeave, for such a huge chunk of that initial cash, doesn't that create a kind of concentration risk?
That's a highly perceptive point. And yes, the immediate concentration risk is absolutely there. But the sources we looked at, they really frame this as necessary growing pains.
The reward outweighs the risk.
I think so. Because the CoreWeave success, that provided the proof of concept that unlocked the door to the big deal that followed, the $5 billion validation. It gave them the street cred they needed.
Okay, so here's where it gets really interesting. The catalyst that proves this transition is for real. Let's talk about the long-term hyperscaler contract.
This is the news that truly changes the perception of the company. APLD signed a 15-year lease.
15 years.
With a U.S.-based investment-grade hyperscaler. Now, the identity is closely guarded, but the market widely assumes this points to a major top-tier tech giant.
And the scale is just immense. This deal covers 200 megawatts of capacity at their brand new facility, Polaris Forge 2.
200 megawatts. That is a huge commitment for specialized AI infrastructure for a single tenant.
So what's the dollar value on that?
The monetary value is what confirms the whole thesis. This single contract is expected to bring in a breathtaking $5 billion in revenue over the life of the agreement.
$5 billion.
And what we need to focus on is what that means for risk. A $5 billion guaranteed revenue floor locked in for 15 years. that completely stabilizes the balance sheet, and it gives APLD access to far cheaper capital for future expansion.
Okay, but 15 years, that's longer than most people stay in-house. In a tech sector that moves so fast, why would a hyperscaler lock themselves in for that long?
It really speaks volumes about the complexity of modern AI compute. You're operating these specialized, high-density GPU clusters. You can't just swap out your infrastructure every couple of years.
Sure.
The planning, the power sourcing, the installation for 200 megawatts of AI capacity, it's monumental. So for the hyperscaler, signing a 15-year lease is about securing guaranteed capacity in a market that is desperately, desperately supply constrained.
And for APLD, getting an investment-grade client means the due diligence was done at the absolute highest level. This isn't just some startup betting on them.
Exactly. This is a top-tier tech giant banking their long-term AI future on APLD's operational capacity. That investment-grade status confirms they vetted everything: physical security, power agreements, cooling, the management team.
It's the ultimate stamp of approval.
It is. The successful execution at Forge 1 led directly to the $5 billion contract at Forge 2. It's a clean, logical progression of maturity.
So this move alone confirms they are no longer a speculative bet. They're a critical infrastructure provider for the whole AI revolution. But that's not where the story ends.
Not at all. Management is moving immediately from validation to massive expansion. If the $5 billion deal was validation, the pipeline they announced next is pure ambition. We're talking about a forward-looking growth pipeline that is truly immense.
They're in advanced discussions for 3 additional sites, right? And that represents, what, another 900 megawatts of capacity?
900 megawatts. Nearly a gigawatt of potential, dedicated exclusively to high-density AI computing.
We need to put that number into context for people listening.
We do. The analysis report gives us this really powerful, almost sobering comparison. 900 megawatts is roughly the output of a small nuclear power plant.
A nuclear power plant.
Now imagine that power, dedicated almost entirely to feeding hungry AI processors, not, a municipal power grid. You're talking about building dedicated industrial-scale infrastructure just to fuel the next generation of computing.
It's way beyond just servers. It's power procurement, land acquisition, specialized construction at a scale very few companies can even think about, and this is all tied to their financial targets.
That's where the numbers get truly compelling and, frankly, challenging. Management has explicitly said they expect to exceed $1 billion in net operating income, NOI, within the next 5 years.
$1 billion in NOI is a staggering goal. I mean, the 900 megawatt pipeline, it makes that number mathematically possible, I guess, but hitting that NOI target requires phenomenal operational efficiency.
Absolutely. It means maximizing utilization, keeping power costs locked down, all while delivering flawlessly across 3 massive, complex new sites.
It really raises a critical question for you as you're watching this unfold. What kind of pricing structure, what kind of efficiency do they need to hit that aggressive target? Especially when you've got giants like Amazon and Google rushing to build their own internal capacity.
Right. It puts immense pressure on continued flawless execution. This is not a passive income stream. It's a hugely capital-intensive industry.
It is. So it's clear the fundamentals have changed dramatically. APLD is truly breaking out. How did the market itself react to all this?
The reaction was swift and decisive. It was textbook breakout action. The stock gapped up immediately after the report.
How much?
It surged over 8% in a single day, and it closed near the $32 level.
That move tells you investors instantly re-rated the company. The narrative shifted from, are they going to build it, to, okay, they built it, they have a $5 billion commitment, and they're expanding like crazy. And
from a technical analysis perspective, that sharp move confirmed new key levels we have to watch. The immediate focus for traders looking at the chart is that $35.50 level.
$35.50, which was the high right after the news.
Exactly. If they can clear that level on strong trading volume, it signals a confirmation of this new bullish trend. And that sets the target toward that psychological $40 mark, and then maybe your run at the all-time highs.
And just as importantly, the old resistance levels, they should now become the new floor.
Precisely. That previous area of resistance, right around the $29 to $30 mark, should now act as a solid technical floor for any natural dips or market volatility.
Which just confirms that investors believe the valuation has structurally moved higher. It's underpinned now by guaranteed cash flow.
Right. This is no longer a stock that's reliant purely on speculative hope. It has measurable, validated earnings.
So if we pull all these threads together from our deep dive, the story is one of rapid maturity. You have massive financial beats driven by success at Forge 1, followed by that monumental validation from a top-tier tech giant at Forge 2. And it's all setting the stage for this nearly gigawatt-scale pipeline aimed at hitting $1 billion in NOI.
The central thesis of the analysis report is proven out. Applied Digital has successfully transitioned. They've shed the skin of this speculative builder, the company selling future dreams.
And they've become what?
The proven operator with $5 billion in validated cash flow hitting the bank.
Sure.
The volatility will still be high, sure, but the trend is undeniably bullish given the scale of this new capacity and that investment-grade commitment.
So what does all this mean for the bigger picture here? This race to secure power and space for AI, it's driving these massive strategic infrastructure investments.
It is. The success of APLD indicates that the market for specialized AI compute infrastructure is hotter and more demanding than ever. The fact that a company can get a $5 billion commitment for facilities that aren't even fully live yet just shows you the intense hunger from the major tech players.
So let me leave you with this final thought. If companies like APLD are now the validated, proven operators for this high-density AI infrastructure, what does that signal for the smaller, more speculative builders out there, the ones who are struggling just to secure the power contracts they need to compete at this, nuclear plant scale?
It's a powerful question.
Will the whole AI infrastructure market just rapidly consolidate into the hands of those who can secure the land and the electricity? That seems to be the real challenge facing the industry now.
A question that really speaks to the immediate future of the sector. We'll have to leave it there for today.
Thank you for joining us for this deep dive. We hope this breakdown helps you navigate what is a very complex and quickly evolving market. We'll catch you on the next one.